What can you do if you're stuck in a drawdown or losing streak and you feel helpless in your trading? Well, in today's video, we're talking all about drawdowns and what you can do step by step to deal with your situation. Now, I know you've probably heard a million times in trading that nothing works correctly all the time, and that is true. There's no strategy or way of trading that is just a perfect all the time. You're printing money and sitting on the beach drinking pina coladas. I wish it was that easy, but it's much more difficult than that. And so in this video, we're going to address the reality of trading, which is what makes it difficult, which is losing streaks, drawdowns. Having to accept losses in your account is never fun and something very foreign, especially if you've never run a business before, you've never been entrepreneurial. It can be very weird to think I'm doing what I'm supposed to be doing in my trading account, and yet I'm still losing money. So if you feel like you're stuck, if you feel like you're in a trade that's just gone bad, or you're in a string of losses, let's say you've had 5 or 6 stop losses in a row get hit, what can you do to turn things around? And how should you know if you should just close everything out and move on and just abandon ship on your trading so it doesn't get any worse? Well, in this video, I'm going to go step by step on some things that I use as a checklist when it comes to drawdowns that I experience in my own trading account. Without further ado, make sure to hit the thumbs up button, subscribe if you're new, and let's get into it. The first step is to, number one, assess your drawdown percentage. You need to quantify what kind of drawdown are we looking at right now. Are you sitting in a drawdown that is small, medium, or large? And go figure, the smaller ones are a lot easier to deal with than the very large ones. And we'll get to that in a second, but let's first quantify what I'm talking about by small, medium, and large. Now, these are my numbers, and this is going to vary person to person. Some people have higher risk tolerance and are okay with a 50% drawdown in their account. If they're trading on a small account and they're willing to just take very high risks, that might be more acceptable to you. But in this, I'll be giving you my numbers for what I would consider a small, medium to large drawdown. So a small drawdown is anything under 10% drawdown. And what I mean by that is your account equity. Let's say you have $10,000 in a trading account and you're down $900. That would be a 9% drawdown on your account. Now, being in a 9% drawdown is still not a great feeling. You've probably taken some losses, or you're holding on to a collection of losing trades, and you're down on your account $900 out of your $10,000. That's tough, but it's definitely something we can recover from. Now, the next section would be a medium drawdown. And for medium drawdowns, I'm going to call this anywhere from 10 to 25 to even 30%. This I would consider to be a drawdown that is something you're working with and may be a multi-month or even a year-long process to get out of a drawdown like this, but it's not something that you can't recover from. Even a 25% drawdown is actually fairly common in a lot of stock portfolios that I have had in the past. I've dropped by 25% and recovered that value. It does happen. And again, markets are unpredictable and they're very difficult to always be on the right side of the moves. Inevitably, you're going to hit a losing streak, and the bigger your risk, the more likely it is that you're going to get into a 30% drawdown. Now, once you get past 30%, I'm going to say 35% and above, I would say this is a pretty big drawdown. Now, you might say, well, what about if you're like 50 or 60, 70% in drawdown? If you're beyond the 50 to 60% drawdown in your account, it is very, very difficult to come back from those numbers. Because if we actually take a look at the math, it gets pretty ugly pretty quick. Check this out. To show you just how important keeping drawdown to a minimum is, I found this chart. And what we can see here is the drawdown percentage on the left and what recovery percentage gains you would need to generate in order to get to your account back to where it started, or back to even just break even. Like, let's say you have a $10,000 account and you lose $500, what percentage gains do you need in order to recover your account back to the full value? Well, here it is. What we can see here is that with a 5% drawdown, you need 5.26% in order to get back to the highs. And again, this makes sense if you start to do the math. Essentially, the more you lose in your account, the harder it is to get it back. And so when you start getting into, a much higher percentage, 10%, 11% recovery gains, that's not impossible to get. 15% down, a 17.65% return is possible to generate with some time. 20% drawdown, you need a 25% return in order to get back to full value. 25%, you can see these numbers are starting to get much bigger. So at a 33% drawdown, you're talking about a 50% return is required in order to get your account back to break even. And so even a 50%, here's what's crazy. If you get a 50% drawdown in your account, you essentially have to double your account or get a 100% return on your available equity in order to get your account back to break even. And so what you can see here is this is why drawdown is a very slippery slope. When you're in this territory, you can see it's not horribly difficult to recover back to full value. But once you start getting into, above 30s, you're talking about a much steeper feat in order to get back to full value. And you can see once you get into the 60% returns or 60% drawdowns, 70% drawdowns, it becomes incredibly difficult to get your account back to full value. And then I love that this chart actually breaks it down to time to recover to break even in years based on a percentage return. Let's say you average 10%, which would be, not a very aggressive or huge return, but let's just say that you were able to generate 10% consistently. It would still take you 1.1 years to get back on a 10% drawdown. On a 15% drawdown, take you 1.7, and on a 50% drawdown, it's saying it would take you about 7.3 years just to get your account back to break even, assuming you could generate 10% per year on average. Now, I know that's not a very big percentage, but it still puts it into reference. The larger the drawdown, the more difficult and time consuming it is to recover those gains. This is why when people say it's easy to make 1% today, this is why it's very comical when people say they can make 1% returns trading per day, because one drawdown and you're going to be very, very pressed to get those kinds of returns consistently every day. It's just very difficult to actually put that into practice. You'll see people all over the internet say, oh, 1% a day is easy, but then ask them for a track record and there's nothing but crickets. So now that you have your drawdown in percentage form, it's time to evaluate that percentage relative to your own risk tolerance, as well as what you generally were expecting for your trading. So if you are the type of person where you've done the back testing, you've done your homework, and you were expecting, I really shouldn't ever get beyond a 25, 30% drawdown, and you're sitting with a 60% drawdown, something went wrong. There was a mistake, and it may be time to seriously reevaluate what you're doing. But if you're somebody who is like, okay, my drawdown percentage is 6%, 7%, and that's very much in line with what my goals and what my strategy and what my back testing was telling me before I started this trading strategy, then you're probably okay to continue to move on patiently as long as you still are taking the trades that you're supposed to be taking, that your criteria for each entry makes sense. There's nothing wrong with having a small or even a medium-sized drawdown. It's inevitable to have drawdown in your account, but the fine line that we're trying to decipher here is whether or not the drawdown that you're experiencing is appropriate relative to your back testing. You should have already done your back testing. We'll get to you in a second. If you haven't done any back testing and you don't really have a strategy, we'll get to that in just a second. But for those who have done the back testing, this is where you can cross-examine. Here's my current drawdown, and here is what I was expecting to experience at some point based on my historical back testing. Long story short, if you've done your back testing and your drawdown is within the realms of what your back testing had shown you, then that is normal. That's part of trading, is to experience the drawdowns that you saw in your back testing. It may not feel great when it's happening in real time, and drawdown never really feels great, but the best thing you can do is that as long as objectively your drawdown is within the realms of your strategy and what you were expecting based on your back testing, all you can do is continue to do what you're doing, be patient, and wait for things to work themselves out. That's the risk of trading. It's difficult and there's never a certainty, but the idea is as long as your realm of drawdown is within the realm of expectations of your strategy and your back testing that you've done prior to putting these trades on, it's okay to continue to push on and continue to work your way out of that drawdown bit by bit, piece by piece, day by day, and trade by trade. So now let's talk about if you do not have a trading strategy or you do not have back-tested results to back the system that you are trading. Obviously, if you don't have a system, then you definitely have not done any back testing. And here is where I have a little bit less grace for you and some tough love instead. When it comes to trading, you should not be trading whatsoever if you do not have a trading strategy, aka the trading version of a business plan. If you don't have a plan or a course of action or a strategy to starting a business, you wouldn't start that business. Somehow traders take this completely differently. They just start throwing money into an account, start buying prop firm challenges, and they start punting money into the markets as if they're just going to strike it rich. Unfortunately, that is just not how the markets work, and that's not how you make money consistently. If you have not done any back testing, research, studying of your strategy, the drawdowns that you can expect reasonably within your strategy, the pros and cons of your strategy, back testing, forward testing, all of these things are not oh, that's a nice thing to do. Those are requirements to profitable trading. And if you haven't done them and you're sitting in a huge drawdown, in my opinion, the best thing you can do is close everything down and go back to a demo account. Nobody likes to hear that. And it's really painful when you're sitting in a drawdown, and I sympathize because I've been there. But what I'm telling you is the tough lesson to accept is that if you're sitting in a very large drawdown and you have no idea why you're in these trades or why you're taking the positions that you're taking, or have any idea of what your back testing results had shown you before placing trades, if you're just trading in the blind and you don't have a strategy, the best thing you can do, in my personal opinion, not financial advice, I mean, you do what you want to do, but in my situation, if I'm stuck in a terrible drawdown, I'm closing everything down and I'm starting fresh. I'm reevaluating. I'm accepting that I was dumb for not trading with a trading strategy with back testing results. It's the reality, right? You need to have those things prior to placing trades. You're putting your hard-earned money on the line. Do yourself a favor, do the research, put in the time and effort so that you don't find yourself in this devastating situation again. I can't tell you how many people I have spoken with who have lost a ton of money in the markets making this mistake. So I'm not trying to make you feel bad if you're the person that's on the other side of this, feeling this like, dang, I really messed this up and I don't know what I'm doing. I'm not trying to make you feel bad. I'm telling you that your experience is not alone. Many, many people make this mistake. And the best thing I've seen people who have turned it all around for themselves do is they take ownership, they close out everything, they say, I'm not doing that again. I'm not going to place trades on an account until I've back tested thoroughly a system to make sure that I actually have a profitable edge in the markets and I have a more of an expectancy of what kind of drawdowns I should be in. If you're in a 40 plus 50% drawdown and you don't have a trading strategy, you don't have back tested results to compare your drawdown to, it's very likely that unfortunately this account is toast. It's going to get blown if you keep going because you don't have a strategy, and the market is not a place to just throw money at and try and, get rich quick. It really is a punishing place for people that lack trading strategies or have not done the research and prep work to actually trade their money consistently. This stuff is very hard, and a lot of people make the mistake that you may feel yourself in right now. So you shouldn't go too hard on yourself, but you should say to yourself, you know what? Maybe I messed up. Maybe the right thing to do is to reset, actually put in the effort into learning how to trade and do the back testing work that you always hear people talk about on social media. But every profitable trader that I know, I've worked with, and all my friends in the trading industry, they're big advocates for back testing their trading thoroughly before placing any hard-earned money on the line. The next steps that I would say, if you're in a big drawdown and you don't know what to do, you don't have a trading strategy, I would say, step one, forgive yourself and say, look, I made a dumb mistake and I'm not going to do it again. That's the first step. You have to get out of the denial phase. You have to get yourself out of this funk of like horrible gut feeling, like what have I done? You have to just get past that and say, I've made a mistake, accept it, move on. And if you want to continue trading, do the work. There's no shortcuts or cheating in markets. I've never, met traders who are profitable who have not put in thousands of hours of work into this and put in the work to actually test their system. So back testing, forward testing, demo trading, all of these things are very important steps to becoming a profitable trader. And so the best thing I would say is to go back to those phases and actually take them seriously. Learning to overcome drawdown is a key component to any successful trader. And if you actually feel like on the drawdown side of things, you're all over the hump, you get it, you're starting, this is clicking with you, then it may be something to consider to look into the process of getting funded. I encourage people who are lacking capital but have trading skills. Maybe this conversation resonated with you and you very much are in line with it, and you're like, hey, I'm feeling like I get all this and I'm ready for the next level, but you lack trading capital. Well, consider checking out today's video sponsor, DNA Funded. DNA Funded offers payouts in as low as 7 days They have profit sharing up to 90%. They have unlimited trading days on both their 1 and 2 phase challenges. And with DNA Funded, you can trade over 800 different assets. If you're feeling up to the challenge, check out DNA Funded down below in the description and use promo code A1T20 for 20% off any of their challenges. Thanks for watching, and I know drawdown is not a fun subject, but it is a core component to profitable trading. Is learning how to endure, deal with, and get through drawdown periods is critical to becoming a profitable or consistent trader overall. So I hope this video was helpful. Make sure to hit the thumbs up button if you enjoyed it. We'll see you in the next one.
I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.